In this video, we're going to go over the financial analysis of departure planning for employees leaving the company. So I designed this for non-technical users, so HR business partners, or they can go in and they can plan for their workforce. So here we're going to go through and answer some simple questions. In which division is this employee? I don't know if you can see the drop-down menu, but it shows all the different divisions of the company. We're going to go with finance. Now, in which country does this employee live? We'll go with United States. And the level of the employee, will say level 15. That's the highest level for an individual contributor. Now it says, what is the employee's name? So this is a drop-down menu of all the employees in the company that are in finance, that live in the United States, and are level 15. So we're going to select me, okay? Now here, what is Devin's current salary? Well, the file already has this information. I've designed it to make sure that the user has access to this information already. This prevents people from looking into places they shouldn't be. So if they already have access to their salary data, then that's fine. They can go ahead and work out this scenario. So we're going to enter my salary, $93,150. Now the departure date, we'll go with August 31st, 2024. There's another box here. We're going to get back to that in just a second. But first, we see, look at all this data. Okay, is this a little bit overwhelming? Well, what's going on here? We have a breakdown of all the total rewards: salary, severance, overtime, the annual incentive, retirement, insurance, payroll taxes, housing allowance, and other, which could be staff development or tuition reimbursement. This first column is the annualized compensation plan. It's pretty straightforward. The next column is the forecast if the employee does not leave the company. In this case, it's the exact same as the annualized compensation plan, and it will be the same for all employees that are on payroll for the entire year. If they had a late start, then this column would be different. Now, what's the forecast if the employee leaves on the specified date? Well, it looks like these are all the same except for the annual incentive. It's showing a $0 value for the bonus. That's because the incentive is paid out in November. So if I were to leave in August, then I'd obviously miss out on that incentive. So then it shows my total cost this year would be $124,500. So what does that mean here? So that means the savings is that bonus amount, okay? So that bonus amount the company doesn't have to pay, so that's how much they save in this scenario. All right, so now let's look at next fiscal year, FY25. If the employee does not leave the company, they receive an annual merit increase, and their other associated costs may increase, leaving a total of $137,000. But if I leave on that specified date, that's what this column is, $0. Okay, so then we show a total of over $7,000 in savings for this year, and $137,000 for next year, a total of $144,000. Now, what's this top box here on the top right? Severance amount. Okay, so let's say it's $20,000. So now the forecast increased here by $20,000. So we got to pay out that severance. So we're not going to be saving any money in FY24. We will, however, still in FY25. That's not anything different. So now we can include that full picture to see that total savings amount. So this is it. And then when we're all done, we click the reset button. The macro goes ahead and deletes the values, makes it ready for the next person to enter in their values.